Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January 21st, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4 hour, the 1 hour, the 30 and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, we have looks like we're getting rejected from that very important 109 level, which again, remember, it's from the high to the low. It's that 618 retracement level. And so far, we're getting rejected. Is this a guarantee we're breaking down? I won't say it's a guarantee at this point. It's kind of unknown if we're going to go a little higher or we're going to start breaking down. But we did talk about some very technical things we wanted to see, and we'll go over those in just a second. High level overview. Wave one is done. We believe we're going to be stair stepping lower in wave two, and this should take us multiple years. From this prior reversal, we're already into it 2+ years. And I did mention from day one, when this plays out, it would take multiple years. 2 years later, still looking at it. So do we need 2 more, 3 more, 4 more? We shall see. But if you're looking at where we're headed, the probability we're coming down here is much greater than the likelihood we're going to go ripping much higher. Well, I had this one on this chart years in advance talking about this target, and I left this potential to even go a little higher years and years and years ago as well. So if we do go breaking much higher, we get above 112, then I think we will make a move toward 117, 119, etc. Could potentially go higher, but that's not what we're thinking. I think we're going to fizzle in this area and likely start breaking down. So this picture remains the same up and until price proves its intentions. So you can see here on the chart, long as price remains below 114.72, destination one is over. Long as price remains below 109-ish level, we remain bearish. So no surprise that we're struggling at this all-important level. Coming over to the charting platform, we can see this uptrending higher low trend line. We've started to rally, we dipped, we bounced, bounce, 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 and this uptrending higher lows trend line has been breached. This is today. Now let's see where we close. That's the Tucson. If we close down here, then I think it's likely we're going to get sucked and pulled toward our magic Fibbo line right there. So is that likely where we're headed? So far, so good. We break and close below this area. It's kind of the writings on the wall. And if we take out this prior swing point right around this, I guess you'd say that's a tan or orangish color line. Not quite as orangey as our magic Fibbo line, but this tan color line, that was the prior resistance. It broke above, it tested multiple times for support. So I think if not only do we get a close below our trend line, but we actually started closing below this level, that 107-ish area, 108, 107. We start closing below that, then it really says we're likely going toward these magic Fibbo lines right there. Got it? Magic Fibbo line. So I need to train myself from saying EMAs to magic Fibbo line. So let's keep an eye on this. Well, how do we get bullish again, thinking we might go to 110 or 111, start pushing back higher toward that zone? Well, we'd have to get back above this little box here, which is my 109.73 and 109.36 would be the 618 from the prior high to low, current low. Then we would get bullish again if we can start breaking above, say, 109.70, 109.80. Then, yeah, then I would start targeting 110.50, 110.80, maybe 111.50. But if not, and we close below this trend line, then the likelihood we're going up here remains low, and the likelihood we're going to drift lower remains high, especially after we close below this trend line and we take out, say, this 108 level, where that prior support used to be resistance and been holding as support. That breaks, then what else do we have? Magic Fibble line. We break that, then the tone is set where we drift below the magic Fibbo line and start taking out 103.90. Then we have a 75% chance we're going down to 98, and the stair-stepping affair will continue to move lower. So far, so good. Well, let's see how price closes and see what happens. Fair enough? All right. Remember the bigger picture. Why are we bogging down at this 109? I don't know if I can condense this enough. Yeah, there it is. So from the prior all-time, not all-time high, but prior high of our 114 up here and our recent low down in July of 23, that is the 109 area we're struggling to break. That is the 618. Well, Mr. Tucson, if this is wave one up here, and we're looking at a wave two down here at 80, somewhere between 82 and 78, kind of rounded off about 80, then what's the likelihood, as long as we remain below this 618, we've tested and we fail, we start drifting lower again. That does set the tone for your extensions, extensions, extensions. And eventually we got a huge extension down here, which puts us into our target zone. So this is why I still think this is where we're headed, but it's going to take years. And with that downtrend, right, Emil? We got a simple retracement to 618. And if that baby fails like we're thinking it's going to, then where else do we go? Failing a 618, start to crashing, breaking lower, does not set the tone. We're going breaking much higher, right? It sets the tone. This top is likely to remain, and we get a 618 rejection. Then as we start drifting back lower, the tone's set for these lower extensions. And then we take from the prior low to high, this last move from this low to that high, that's where this 1618 and this 618 level comes in on the way down. So if we break that 103, as I zoom in, that's why this level is very important in its own right. From that prior low to high, 618's 103.90. So if this decline continues, we don't hold the magic Fibbo line and it drifts a little bit lower to this green line right there, we start closing below 103.90, then bingo, that sets up 75% chance we're going to 98, 70 plus, we're going to 97, onward and downward we go. Why is that important? Well, we look at the dollar index, not so much that I just trade the dollar index, you can trade it, but I use it for a directional compass or GPS coordinates of where other asset classes are going. Like most obvious is the euro dollar, right? Had a nice pop the other day as the dollar dropped, euro pop. Who could have guessed? Who could have thought? Who could have anticipated? This is why we talk about the inverse relationship. So if the dollar index continues to fall, the euro is absolutely, without question, without fail, no exceptions, no ifs, no buts, no ands, no exception, will go higher. Now, if this holds, where is the euro likely to run to? Up here toward this 106 magic Fibbo line. If the dollar retraces down to, let's do it real quick again, if we hold, and again, it's the day today, so it's not a candle body below yet. It hadn't closed. We're definitely below it, that trend line to start, but we have not closed. So if we do close and we take out that 108, 107.80, so right there, 107.80 area, that tan line. So if we can close below 107.80, then the door is ajar to come down here to the magic Fibbo line, which would be the inverse of what the euro dollar is going to do. So euro dollar, what are my targets? Well, if we end up getting that trend line to break, and we're doing the same here from the prior high, lower high trend line, a little bit different than the dollar index, we're kind of testing it now. We haven't broken it like you show in the dollar index, but we're definitely testing it. My big arrow out of the way. But this lower high trend line, we're testing. So if we can start breaking this trend line and the dollar breaks and closes below its trend line, then the door is ajar to go up toward what? About this 106 level, which is a couple of hundred, almost 300 pips still to go. Is this a guarantee? No. But if I come back to that dollar index and I see this, where yes, we close below this line, and yes, we see we take out that 107.80 area, then the probability we continue to decline, whether it takes days or longer, the likely we continue to decline toward this line about 105-ish, magic Fibbo line. And what if it takes several days? This is sloping upwards. After that big move, our line was declining, then it started to flatten out, then it started climbing upwards. So as we start to see, maybe we start dropping over the next several days and we come toward maybe 106 areas. This is sloping upwards. And each day the decline, we slowly but surely start sloping higher. If this decline continues, obviously this line is going to flatten out, eventually turn down. If we start tanking, get the point. So this line does follow the moves and the breaks. This is why it needs to be on your chart. Because even if this continues to decline, well, I can certainly make some pips on the euro and the pound dollar going higher as this decline. But is this just a correction back here before we bounce and still go higher? Or is this something in the nature, maybe we come down here, we bounce to a lower high, then we start making lower lows. That's why this level down here is all important. If we start to see this decline, we bounce off the magic Fibbo line, we rally, we make another lower high, lower low, and we ultimately see price break, close below that 103.90. Now the percentage of going up here becomes exceptionally low, and the likelihood we continue this stair stepping lower becomes exceptionally high, in that our 75% would be we make new lows. That's this level right there, 103.90. So that's why it's so important to force price to prove its intentions. And this break below this uptrending line is a sign that, uh-oh, Houston, we might have topped. This might be the end of this move, and we could be on our multi-week, multi-month breakdown, and even multi-year breakdown. And yes, over the years, as we decline, we're going to get rallies and decline and get rallies and decline and get rallies. So I'm not saying that, what if, William Bruce, we come down here, we don't hold, we break 103.90. Does that mean next couple of days we're going to be sitting at 98, 97, and then maybe a few months later we're down at 80? No, that's why I keep saying years. Amen. But this is looking good so far, that if this holds and we continue to go a little bit further, that 107.80 area, battle zone, former resistance, turn support, 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 multiple times, that we start not only breaking the line, but closing below that, then where else do we go? I think like a heat-seeking missile, stair-stepping affair, we're going to go test that line. If that doesn't hold, then this is a very important level below it, 103.90. And if that doesn't hold, this little zone, then it's like game over. We're going to continue to decline at a 75% chance. Well, trading always involves risk, and nothing is ever a guarantee. But I like the high percent trades, high percentage, and 75+% is a high percentage. Just like the technical picture says, if we do break this 107.80, the probability we come down and seek out our magic Fibbo line is high. So keep an eye on that. Could we possibly come down here and bounce and go higher? Sure. We start to see the dollar get another second win, and we start closing above this 109.30, 109.70 area, then yeah, I would say we're going to 110.50. We're going to test this 110.80 and might even go up here to that 111. Why is 111 area so important? It's the other half of that picture. We're over here. My 618 is the 109. My 111-ish is the 786. That's what this big red box is all about. And I said years ago, as we started to top in reverse, we should stay below this level. That's why I put on the chart, we remain bearish below 109 years ago. Mr. Tucson, Emil, James, Ian, we put that on the chart years ago. 109 remained bearish. How did I know that this top in reversal would come into somewhere this play and then bring that level back to us? Well, it was based on the Fibos and the extensions and what? Prior price action. We hit 109 before we retraced. We tested it several times, but we finally broke it, retested to go up to the 114 level. So this is a critical level way back when. And as you're grinding higher, you start to break below, then it sets the tone that this top is likely in place for quite some time while we drift down. Wow. So, yeah, that's why this level came into play long before. And even after we topped and reversed, we talked about that. And as you well know, it's been on this chart for several years. I didn't just put this on here. Been there, done that, right? So in closing, is this over? Good chance it could be. This is a perfect area for it to stop and start to unwind back down. Again, this is why I keep saying years. So don't think, well, now that it's rejected, it has to get down to 80 by next week, next month, next year. No, it could literally take several more years. It might play out the rest of this decade, right? Possibly. It took us 15 years from the swing point low, 15 years to get up here. Now, I don't think it's going to take 15 years to get down there, but I do think it's going to take multiple more years. So if this is 2 years, maybe 3 more, a fraction of the 15, a third of the time would be 5 years. So let's see. That would put us toward the end of this decade. From this little swing point high, 5-year decline would put us near the end of this decade anyway. Got it? So that's where I think we're headed. As long as price remains below 109, we remain bearish. As long as we're below 114.72, wave one is over. But just for those of you, well, what if it does break 114.72? Then we'll have targets like 117, et cetera, further upside. And that would then shoot for this wave one eventually to end. And then guess what happens after that? Still got to deal with this guy. So it doesn't say, well, this will never come and get a retracement. It's going to happen, no doubt. It's just, do we go higher before we do it, or do we continue this decline now? And until price proves otherwise, this is over, and we're working on that. So line up the charts from that prior swing point to the low. This is the magical area. As long as we stay below this area, the likelihood we're breaking out to new highs is low, and the likelihood this downtrend continues is very high. What if we do go breaking above this, say 112? Got my line in the sand. How long have I had this level on the chart? This 112 level up here? A very long time, right? That is, I don't know if it'll allow me to go back that far. This is a monthly. No, it doesn't look like it. But we have, if this went further back, we have a major battle zone right around that 1012 from many years ago, in which the dollar was much higher than it is now, obviously. So this line I put on there a very long time ago. So it kind of fits in there, 109, 112. Where did ultimately price end up playing out? 109, basically 112 level based on the high to low and the rules we like to use. Interesting, isn't it? So what if this plays out and we start closing below? That's a sign, technically speaking, that this high might be in place and we're going to start declining at least toward this magic Fibbo line. So two things to watch, just circling the wagons. James, we closed below 107.78 area. That's battle zone right there. We start closing below that. Likelihood we're headed toward the magic Fibbo line, which is roughly about 105.5 right now. We break that, then the likelihood we're going to go down this 103.90 right there, this 103.90 level, which is below this magic Fibbo line. Be likely we test that. We don't hold that, then we're likely going to come down toward this 102 area, this little blue line in the sand. So remember, I talked about that months back as well. We see this come down here, we bounce, make a lower high, lower low. We start closing below 103.90 area, then we got a 75% chance we're going there. But once we start to take out this blue line, game over. We are not going to reach this blue line down here, then go breaking out. The percentages, we would not only 75 plus continue lower, but it really would take this off the table of us going higher and breaking new highs and set the tone for much lower lows. And that's what we're thinking. All right. So why is that important? Because I do personally trade the euro dollar. I think this might be the end. If we can do what? Well, technically picture, this is a little bit different than the dollar index, as we're not breaking an uptrending line we have on the dollar index. We're not breaking the downtrending line. It is the technical picture, it is. But if we start breaking above this line, then the tone is set for what? EMA, prior swing point. So 106.30, this magic Fibbo line is up here at 106.69, as you can see, area. So, Mr. Tucson, what if we can close and get a candle body above this trend line? Trend lines are the least, I won't say they're not important. Of course they're important, but they're not the strongest of the technical picture. So if we break the trend line, that's a good start. We take out that swing point is extremely important, because on the way down, that was a major resistance level that we failed to go higher, set the tone for the next big push lower. So breaking the trend line, you can see we have a lot of consolidation here. Test, 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 fail, test, fail, test so far. But if we close above the trend line, which represents this prior consolidation, then what's next? Next level. Well, if you want to take it incrementally, we got a little swing point there. And then we got the major swing point up here. But what does that represent? We start drifting toward that top swing point here. Guess who's sitting there? So this is why I think as a trader, this looks good so far. Once if I'm long the pound or the euro for that bounce so far, I'd definitely be in a position of authority so that if this, whatever reason, hits this and rejects and we go lower, the only way that's going to happen if that dollar gets back above and does what? This little move here. If you see the dollar starting to break back above and we start closing around this 109.30-ish area, 109 and a half, we start closing above that, then yeah, I think we're going to go to 110.50, 110.80, which in turn would mean the euro would get rejected and the euro would start to push toward 101.15, right there, 101.50, 101.30 area. But that's not what we're thinking right now. If the dollar could continue to close and push lower, this is going to continue to grind higher. And the probability if the dollar goes visiting its magic Fibonacci line, the euro is very likely, high probability, extremely high probability, going to go visiting its magic Fibonacci line to the upside. And again, that could be several hundred more pips. Then what happens? From the prior high to low, the pound starts closing above this 108-ish level. Then we have a 75% chance we go into 113.60 up there. Several hundred more pips. Close above 108, we go to 113. That's an additional 500 plus more pips. I like it. High percentage. Any questions? So I do think the dollar is going to decline long term. I do think the euro is going to go higher longer term. Inverse relationship. Why? Dollar index is made up of a basket of currencies. The most predominant currency in that basket, euro dollar. That's why it's the exact inverse relationship. Looking at the software. We always do Elliott wave briefly on this day. On Tuesdays, market forecast. But you can see looking at the software, my daily's still up. So no reason to believe we won't grind a bit higher as it's pushing. Check out the weekly. Weekly's hooking. We haven't officially crossed yet, but what if, William Bruce, we end up getting this PAI hook and a trend momentum cross? We see a little slope. We see a little angle separation. What does that mean? Green crosses above the red, like down here. Green crosses above the red. You get a little slope, a little angle and separation between the two lines. PAI hook, slope, angle and separation. What does that equal? Daily cycle up. Well, what did I say last week? Last GMF. That if this occurs and the weekly does and the daily ends up cycling and this ends up cycling, this is why we use Fibonacci's, we use Elliott wave, we use our software with everything, and it makes it so much nicer. That what's the likelihood we're going to go up here? Extremely high probability. Well, with Ichimoku cloud, when you're below the cloud and you know that you have a time frame that's going to cycle highest probability, then price is going to get sucked and pulled into that cloud area. Like a beautiful, beautiful, highest probability. So is this a breakout? Are we going to break this little prior consolidation zone? Well, if we do, then we're going up here. Another couple of hundred pips. Likely going to go test the magic Fibonacci line up here. And then what? We start breaking that. We start getting above that 108-ish level from the prior high to low, which is right here on this chart. We start getting above that 108-ish level from the high to the low, means we have a 75% chance, and we mean not a wick, but the candle body. Then we have a 75% chance we're going up here to 113.60 area. Got it? All right. And what is the software showing? Right now, we got a weekly turning and a daily still up with steep slope angle separation. So I would say, Mr. Tucson, the likelihood that this is over right here is pretty low. I think it's going to get sucked and pulled into the cloud. We don't have the weekly hooked and crossed. That's what this software does. Talk about a beauty. You get a weekly to hook and cross with slope angle separation, the daily is going to cycle. What is a cycle? A PAI cycle and at least trend momentum, this red and green, trend momentum cycle. Why is that important? Well, depending on what market I'm trading, it works in all market, it works in all time. So what happens when you get a monthly to officially hook and cross and you get slope angle separation? A weekly cycles. What happened to our weekly? It cycled. The PAI went down, the trend momentum went down. That's part of the game. And what happened when the monthly hooked and crossed? We had months in advance, months, because it takes a weekly about 2 to 5 months to cycle down. How cool is that? So again, monthly hooks and cross, weekly cycles, weekly hooks and cross, daily cycles, daily hooks and crosses, 4 hour cycles, 4 hour cycle hooks and crosses, 1 hour cycles. Just goes through it. 1 hour hooks and cross, 15:30 cycle, 15 hooks and crosses, 5 minute cycle, 5 minute hooks and crosses, 1 minute cycle, on and on and on. So whether you're a scalper, a day trader, or position trader, use the different time frame, use the technical picture. That's simple. But for now, to say that this euro bounce is over is a little premature. I mean, the weekly is turning, hadn't officially crossed yet, but I'm keeping a keen eye on that. And my daily is certainly still straight up. So the probability we keep grinding higher looks good. And once we take out this little battle zone, notice the software has its own support and resistance built in. I can turn it on, I can turn it off. It's very flexible. So with this, once we start breaking, this is an important area. Got a blue line, bias and key line on top of each other, which just so happens to be a major support zone previously into a resistance zone. We call those battle zones, former support, turn resistance. Right now it's still resistance, but what happens when we break it? We go to the next level. And what if we break that? We go to the next level. And we're setting up for a test of this magic Fibbo line. We also look at this picture. Is this wave 2 over? What's the bigger picture? A, we're going up in B, long term. And this is where I think we're going to ultimately grunt and grind our way towards before we top and reverse and start another big push lower. Now, some people would say, well, Gary, I mean, this thing was up at 113. We went down about 102 area. That's a big move down. Yeah, but it's still the same. From the low to the high, it is a 618% retracement. Just like the dollar retraced to 618 to the upside, the pound the euro retraced to 618 to the downside. That's still bullish. So if this holds and we start breaking back out, where we're going? We're going to stair step our way higher and higher and higher and higher. But this is kind of the plan. If the dollar index goes to that 80 area, then the euro is a very extremely high probability going toward this 140, 145 area, period. So that's thousands of pips away. So I've been long the euro since this low down here when we called it, and I'm staying long for years to come while we grind much higher. This retracement is part of the course of an uptrend that's, again, this is a shorter term uptrend because the pound, the euro, I keep saying the pound, we'll get to that one. We've been in a major downtrend forever. Never mind the bullish wave count. We're bullish on this side now, but this is lower trending highs. And what happened? We broke it, couldn't hold it. Now we're breaking that trend line. Look at this line. Emil, we hadn't looked at this chart in ages, and look at that trend line. You bring it down and look where we're testing. So we've been testing lower highs, lower highs, lower highs, lower highs. I couldn't hold it. Still got a lower high, went down. And we tested this zone for a while, broke above, retest, went up, retest. So the more I look at this, the more bullish this is really looking. Amen. So is this the end? Watch those levels on the dollar index. It continues to break down. Absolutely, we're going to continue to go higher. But that's the long-term plan of an up move. And again, we're still going to be at lower highs. So I don't think this rally is going to these all-time highs over here. No, I think we can get a lower high than another lower low down over here. But we're talking probably into next decade before we start to top and then start moving back down. So years still to get up here, but that's the long-term area I think we're headed. Amen. And again, looking at that from the weekly perspective, that's what we're seeing. No reason to believe that this is not playing out. So if you're long on the bounce, we talked about that a long time ago, that we could buy this dip. This is where we kind of targeted about 102. My 618 retracement was a good area for us to reverse from. Let's see if we can start to break above the EMA, get above the 108. Then it's extremely high probability we're going to 113. Off the chart up there, we're going to 113, which is, you can see up here behind my little box. Onward and upward we go. Is it possible this could fizzle and we still go lower? Yeah, if the dollar goes higher, this is going to go lower. But if we start getting toward this magic Fibble line, we break above, get above that 108-ish level, then the tone is set for us to go much higher. That's what this technical picture is screaming. So watch this closely. We start breaking the trend line. We're likely going to go up here. We take out that swing point / trend line, and we then eventually go and break this 108 and change. Game on. 113, 114.95. Onward and upward we go. All right. What about the pound dollar? It's kind of in the same boat. Kind of have the same kind of descending or lower high trend line that we've been watching. This one's a little bit more rugged. Still got a little bit more to prove, but we've been making lower highs, lower highs, lower highs, lower highs, lower highs. So once that breaks, where are we likely going to go? Retest the next big swing point up here about 125, then 127, then this 128 up here. But it's a long way to go, but same rule. If the dollar goes seeking out its EMA, the euro is likely to go seeking out its EMA, and the pound is likely to go seeking out its magic Fibble line. Again, this one's been declining. We were sloping higher. We'd break above, come back, bounce, go higher, come back, bounce, go higher. Didn't reach it there, but kept going. So, yep, this has been a big retracement. We warned you this was coming. And look at the pound. We got a long way to go before we get to that 618 retracement like the euro's testing. Much bigger picture from the prior high to low. It's way off the chart up here. I don't know if I can get to it on this one. Let's see if I can do that from maybe a weekly chart. Got a lot more info in here. From this high to this low, my 618's way up here. So this is where I think we're headed, right? This is what this box is about. So just like the euro's headed toward its 140, 145, the dollar gets to 80 or lower, that's where we're headed. So what about the pound? The dollar gets to 80 or lower, where we're likely going with the pound? Up here near 170. Somewhere between this 158 and 170. So I don't think we're going to get way up here and go breaking all-time highs. I think it's the same kind of thing. High, low, lower high, then another bush lower. But we've been long the pound since 105, and we went up over 2,000 pips, almost 3,000, from 105 to 130. as we were drifting in that area. Big move, big move. So now we got a retracement coming. What are we holding? Look from this bigger picture here. I'll expand that out, move this, kind of push this over here, stretch it out, move it a little bit for us, and zoom in a touch. So just like I was showing you, Euro's holding that 618. Well, check this one out. From the low to the high, my 618's down here about 115. So we're nowhere near there. So this is not retracing as far as the Euro has, but even if we went down here, it's still bullish to bounce off of there and go much higher. So big picture, yeah. Is this the end? We're ready to go breaking out? Maybe. Or maybe we go just a little bit lower, but the plan is to make a higher low, higher high, not top out here and start breaking lower just yet. Not yet. Not yet. So in closing on the pound, why are we still a little bullish pound? Same rules. Dollar's likely going to dip lower. The euro and the pound's likely going to dip higher. But how do we know? I do everything based on the software. Look at the data. It looks very similar to the euro, does it not? Reversal, we got steep slope, we got angle separation. We're drifting higher. Where's my weekly? Where's Waldo? Waldo's also oversold, hooking up. We haven't crossed yet. Looks just like the euro I showed you a minute ago. What if, William Bruce, we see this not only hook, but this cross, and we see a little slope angle separation? Well, then the daily's going to cycle. What happens when a monthly does its thing? Well, the monthly did it just like the euro. We got a hook, we got a cross, we got slope, we got angle separation. That was a monthly. What did the weekly do? Highest probability, the weekly went to oversold. Weekly went to oversold. Can't make this stuff up. So is this the end? This is a good area for us to bottom and reverse from. It happens to be a major battle zone coming across from a long time ago. Former support to resistance, resistance, back to support, support, support. So yeah, we went from a resistance level. We could drift this further. I don't know how much more let me go, but I'll turn my auto scroll off and go back a little further. This is a magical area right around that 120. Support here, support there. How much further can we go back? Look at that, Mr. Tucson. Not a thing of beauty. You think the pound likes support around 120? Sure it does. We've tested it many times, rallied, tested, rallied, tested, rallied, tested, rallied. So this is not a bad area for us to start to reverse from. And even as we finally broke below it, we tested it back to the upside. Nope. Went down to this ridiculously low, 103 area. That's when we got long. And from this low to that high, we're nowhere near the 618. I showed you on the other charts, more like around this 115 area. But could this be the reversal? Could be. Could very well likely be. So what should I be if I'm long the pound? I've been long, and I add it to my position. Small little nibbles. Let me turn this back on. So we get to hard right edge, and we can see that, yeah, my daily reverse, got a hook and a cross. How do I know when I should be in a position of authority? Well, if I'm trying to test a falling knife, which this thing's been falling very strongly, and I'm trying to test it, this is what the software does. When a daily hooks and crosses and we get slope angle separation, what happens? A 4-hour cycles. Duh. We're just saying it. 4-hour cycles. What did it do? It cycled. It cycled. So when I see that and I get my 4-hour in overbought territory and the cycle is there, what do? We get to a position of authority. Then what does that mean? Well, I can go to break even plus one. So if this baby retraces and stops me out for more profit, I already made some profit. I'll get some more profit. If not, and it just keeps grinding higher and higher, I'm still in it to continue to let it run. And if it does reverse and does the other thing, then great. It'll pit me out for more profit, and then I'll look to buy the next one. So I don't know if you're a scalper, day trader, position trader, long term, but that's why we cover it all. And the software is there, whether you're a scalper, scalp with the best of them, or you're a position trader, a day trader, doesn't matter. It's all about the hook and the cross, period. And then the technical picture. So what about the pound? Again, we break this trend line, we start to set up big time opportunities for more upside. What are they? Bring this back over here for you. Start breaking that, then we're likely to start testing this 125 area. Why? Well, you can see why we need to break this. Price always stair steps, Mr. Tucson. We know that. And notice this swing point low, swing point high, it's kind of a little bit crooked line, but this is former support in this area. Then it was resistance, and it's kind of resistance. So we start breaking that trend line. Then what? We're likely headed to the next consolidation zone. We break that one, then we head to the next consolidation support resistance zone, which happens to be my magic Fibbo line. We break that, then game on. We start coming up here toward the next targets. Well, what about from the high to the low? That's the beauty over here, my 618. So if this rally continues and we start moving here and we start breaking the trend line and our EMA right there, bingo, which we call the magic Fibbo line, we start closing above that, we take out this 129 area, then we have game on, my friend. Hundreds and hundreds of pips likely to the upside, because what happens from that high to this low, we break that 618 at 129 and change. Bingo, we have a 75% chance we're going to 136 and change. 700 pip move. 700. Then a 70 plus plus, we're going to basically 138. Now that goes up to 900 pips as we get above this level right there. So could I be long right now? Yeah, when the software reversed and we got a little trigger, what did the software scream at us? I set it days in advance. Go back to the daily. Now when the daily gets oversold and triggers high, you can get in this thing. Be in a position of authority. What if it continues? Well, my weekly starts continues to do what? It's hooking. All we got to do is get it to cross. Then we have a highest percentile that this daily is going to give us weeks, not just days longer, but weeks, as this PAI cycle, red, blue, and that green line we call money flow, how much money's flowing into this. And then, of course, our PAI, trend momentum cycle. Where's price likely to go when Ichimoku cloud gets sucked and pulled into the cloud area? That targets those same targets we talked about. 125, we start breaking that. Look who's up here, close to 127, magic line here, magic Fibbo. And we start closing a little bit higher, basically up here near this prior swing point. That's that 618 to the upside. We get that high and start breaking on the other side, this cloud area. Then here comes 136. That's why we use both here. I like the target as far as the charting platform here. We stretch that out, but that's the magical level. 127 is important. We break that. We should go to 129. We break that. Then, yeah, there's different levels on here, but it sets the tone. You close above that 618, you're going to go toward this 136 target, 75 plus percent. We're going to go 70 plus percent toward that 137.97, basically 138. Bingo. So if you're long on this bounce, be in a position of authority. You got nothing to lose and everything to gain to let it continue. The daily's still up, the weekly starting to turn. Yes, it's possible that we get rejected and go lower, but it's going to be what the dollar index does. You will not see the dollar index go plummeting and moving toward 80 and this thing just continue to go lower. It's inverse. Look where the dollar is located. Pound, US dollar. Dollar strong, pound goes down. Dollar's weak, pound goes up. Any questions? Carry trade. Warned you about when we got to these extensions. This, maybe this is it. Maybe we continue higher. Could maybe continue higher toward that 165, etc. Or when do we start to call this down? Well, from the prior low to high, you start getting a little iffy even on this recent low to current high. We start breaking below this 153 area, basically the EMA here, which we call magic Fibbo line. We get below that magic Fibbo line, then we start targeting 147, 146, 142, start breaking this prior support consolidation zone over here. The door's ajar to go to 136, 133. We've been long this trade for quite some time. Years ago, when we were down here, I made a huge, and we don't predict in this class, we leave that for the profits. But we anticipated, I said years ago, we hold 127, we go on to 160. Highest of highest probability. We hold 127, we go on to 160. That was the targets. See the low? From the high to the low, there's the targets. That's why I said 160. We did it. Then after this pullback, I was very encouraging to buy this. I can't tell you what to do. I'm not a certified financial planner. If you need one of those, you can hire them. Most certified financial planners, all they want to do is take some of your money and make it their money. Well, I care how you do. That's my thing. I want you to do well. And we talked about buying this dip, and we were at least going to go up toward this 153, 157 area, even if this represented the end of the move. From this conversation, we would go to 160, and I thought that might be it. We got a beautiful retracement. Happened to be a 618 retracement on this much bigger move from this low to the current high is a 618 retracement level. So that's when I said, I'll buy this based on the bounce. Had a weekly oversold, we had a daily oversold, and this was setting up a nice big move. So yet we got more than 1,000 plus pips here, 2,000 plus there. Plus we got interest payments every day for 2 years. Big one. Took the market's money, reinvested, got another big move up. What about now? I took a ton of profits on profits because, yeah, we could still potentially go up here, but right now we're at a lower high. And we're kind of getting rejected right around that 618, 786 box area. And it doesn't mean it's over, but it certainly means after that massive 1,000 plus pip bounce, 2,000 plus pip bounce, time to take profits. Could we go lower? Yeah. The dollar starts tanking. It's going to be tough for this euro yen to continue higher. What would do it? Interest rate hikes. Interest rate hikes. You start raising interest rate, it strengthens the US dollar. Start cutting and continuing to cut rates, it starts to weaken the dollar. That's just currencies in general. So any currency that is raising interest rates aggressively, they tend to get stronger. Any currency that they're cutting interest rates aggressively, they tend to get weaker. Well, what do people use the yen for? Carry trades. You can go and borrow yens, and even in some cases, they give you money to borrow it at negative interest rate. So they want you to take their money, and then a lot of people are taking this investment and in buying higher, maybe some of the Magnificent Seven stocks, could be crypto, could be whatever higher risk type investments. Well, when I bought the dollar, high interest rate versus low interest rate, they paid us a dividend. I like it. Interest payments every day. So in closing, is this the end? Well, it's a three-way move so far. It's holding at that 618,786 area. So be careful. What is the Fed going to do? Well, that's the question. Look at this picture. We use this DGS2 and then the Fed fund rate. Fed fund rate is this red line. That's currently where interest rates are. And this is where we're sitting now. We cut 50 basis points, another 25. And our 2-year maturity rate has been rallying. We're right in that zone, Emil. Is the Fed going to wait? Is the Fed going to continue to cut? I think this is why they kind of paused for some time, because they were worried they didn't want to cut rates and then have to see this maturity rate go breaking out. And then as soon as they cut rates, be embarrassed that they had, we got to actually raise rates. And then they paused for a while. This was starting to go lower. And I love this picture because as soon as they made that aggressive, ooh, we're going to cut interest rates. Remember, Mr. Powell, we're going to cut interest rates 25 basis points, and we're going to do it 4 times, and we're going to cut rates 4 times in 2024, 4 times in 2025. And what happened? They cut it once. Look at this baby spike. They cut it again, spiked again. So we're right in the zone. Remember, it's a 0.25, 4.5, 4.25, kind of sums it up to around this 4.5 area. So we're in the zone right between that quarter point where the Fed does it. So is this going to break down and the Fed has to continue to cut rates, or is this thing going to bounce and go up higher? What if oil prices continue to rip higher? Then we could see the Fed have to raise rate. If this maturity rate runs and starts running away, then we cross above the Fed current rate. Then what does the Fed do? Well, I take you out on a little journey. I love this journey. Bring this into perspective. This is all the major market crashes over the last multiple years. And this is very obvious what the Fed does. So for those of you out there that think, well, the Fed actually dictates the rates, they raise and lower according to what they want to do. No, they chase this maturity rate. So when was the last time we had a Fed rate above the maturity rate and it started to decline? What happened? 2000 dot-com bubble burst, and this maturity rate just started to fall off a cliff. What did the Fed have to do? Cut rates, cut rate, cut rate, cut rate. Then eventually it bottomed and the blue line started to go back up. What did the Fed start to do? Raise rates, raise rates, raise rates. Then we got up here again. The Fed rate was above the blue line. And what happened? Next time was the financial crisis of 2008. That was the real estate debacle. And the markets crashed. The two maturity rate crashed. What did the Fed have to do? Start cut rates, cut rates, cut rate. Then we finally bottomed out. What was the next one? And when we started to see the maturity rate run off, the Fed kept raising and raising and raising and raising until the maturity rate fell. We started to cross back above and below the Fed rate. Below the Fed rate, crash. Below the Fed rate, crash. Going all the way back to the dot-com bubble burst. So, Mr. Tucson, where are we? Fed rates above. Is this the beginning, or do we get one more little blip and go higher? Because maybe it's oil prices that rallied to 90, 100, whatever dollars a barrel, continues to run. That's going to cause inflation to come back. And yeah, that's what they do. Inflation runs rampant. The Fed has to raise rates accordingly to curtail that. But they didn't just decide to raise rates at the most aggressive clip in our history. It's because this maturity rate ran off. Like here, when it ran off, they raised rate. Ran off, they raised rate. Bottoms down, they cut rates, bottoms down, cut rates, bottoms down, cut rate. So bear with me. What does all this mean? Janet Yellen she admitted on Stephen Colbert, one of those shows, I didn't watch it, but she admitted she smoked marijuana. Maybe she smoked so much marijuana that it fried her brain, because she said, we will not see another market crash in our lifetime. In our lifetime. Well, that tells me that market crash is not only coming, it's coming sooner than you probably think. So again, what happens when the Fed rate is above the maturity rate and then we get some sort of financial debacle? And this last one, 2020, even before the cards in COVID lockdown, it was in the cards for this to happen. Technical picture. So where are we now? Go back to the dailies. You can zoom in on this. We're at that zone. I'm not going to say, well, there's no way we're going to ultimately go and have to raise rates. We could. If oil prices take off, watch this blue line. If this blue line starts racing off, and maybe the Fed cuts again. Guess what's in a couple of weeks here? Guess what's in a couple of weeks here? Is it on this one? Yeah, calendar. This week it's pretty benign, right? The week we're in, we had the inauguration, and now we have President Trump speaking on Thursday. Remember Trump's last presidency? They actually had bots, algo trading bots, that every time he tweeted were set to react on his tweets. Is that going to continue this presidency? I don't know. But this could be potentially on Thursday. It says tentative, but if he does speak, the markets could react. So be careful around this time frame. And it's tentative right around 11-ish, noon time frame, 11. So it depends what he says, and markets might react. But other than that, we don't really have a whole lot of data coming out this week. So it could be the Trump speak that does it. And then on Friday, we do have a little bit. We got some existing home sales. That'll be interesting to see. And revised consumer sentiment. Is that going to do anything? Expectations on inflation. Well, last week we got some CPI, PPI, and the markets kind of reacted to that. Is this going to do it? Well, the big one, which I think starts to mute the markets a little bit, is the following week, which is the 26th, week of the 26th. And lo and behold, we have some things to worry about. A little durable goods, not to say this is the big market moving, but as we drift down to Wednesday, Houston, we could have some major volatility. FOMC, Fed fund rate, all right? That's next week. We're at 4.5, 4.25, 4.5. Are they going to keep it? Expectation, previous forecast? Are they going to leave it alone? Are they going to cut rates? Are they going to have Trump push the issue? He wants lower interest rates. Are they going to do it? Or is Mr. Powell going to go, Well, I don't think Trump or Mr. Powell is going to dictate what the market's going to do. Doesn't work that way. But do they cut rates? Do they leave them alone? Do they certainly unlikely going to raise rates? So the forecast right now says they're going to leave them alone. Well, look at this picture, Mr. Tucson. It kind of says they should leave it alone, right? Fed rate is it's still below, above right now, the 2-year maturity rate. But the last time they cut big, this rallied big. They cut a 25 basis point, it rallied again, right? That's where they cut rates, boom. And they did the big 50 basis points, boom. So they continue to cut rates, and this blue line takes off, then they are going to be embarrassed and say, well, we're able to get 2 or 3 rate cuts in, and lo and behold, this blue line takes off like this illustration here. And next thing we know, they have to start raising rates again. What could be the catalyst to do that? Oil prices. Oil prices continue to rally and go up into the 90s and hundreds, then every product is going to have to reassess and change their pricing. Inflationary pressure. Well, look at this high to low. 618 right around 4.5. All we got to do is go a little bit higher than 4.5. Then that sets the tone just based on, you mean to tell me my Fibonacci retracement extensions works on a 2-year maturity rate? It works on everything. It's the Tucson. If this baby rallies and starts closing above this 4.5-ish, 4.54 area and starts racing off, then we start closing above here, then we have like a 75% chance that 2-year maturity rates can make a run toward 5.4. And maybe this 5.6 up here. Huh. Well, I can rest assured, I can know for sure right here, James, this blue line starts racing off in this zone. Fed rates down here, they're going to do what? They're not going to keep cutting rates while this baby races off. They're going to chase it back up. Like they did all on that big run, the Fed had to chase it. And I think they even did a little overkill. They should have stopped in this area when they caught up, should have stopped and then paused. But no, they had to raise rates and raise rates again. Then they paused. And then I think they a little aggressively cut rates. But we shall see. We shall see. But it's interesting how you look at that picture. Well, calendar next week, there it is. Not projected to raise rates, but if that blue line continues to run off, or they do, and well, we're going to make Trump happy. I want to keep my job and I want to make Trump happy, so we're going to lower rates one more time. That does not bode well for this picture, because we cut rates again, it's pushing us down toward the bottom of this box. And every time, most recently, when they started to cut rates, bingo. Then they cut rates again, bingo. So what happens if they cut rates again, bingo, and then we flip-flop where the 2-year maturity rate is above the Fed rate and starts racing off. Again, we start getting above this 4.5-ish, 4.54, and start closing above that. Then we got a 75% chance we're going to run toward 5.4. But it doesn't work on maturity rate. It works on everything. Highest probability. So watch this picture. DGS2, you hit the plus sign, and then you add the Fed fund rate. So when I hit the plus sign, see the Fed fund rate, got a check that's on the chart, but this is the chart I watch. There you have it. So what they gonna do when they come for you? What you gonna do? Well, markets. This Tucson, is this gonna break out? Or are we gonna fizzle? So far, we broke the trend line, retested. That's kind of bullish, right? No reason to believe it's not bullish, but we're right dab in the middle of our all-important resistance level. What is it? From the prior high to low, let me bring this into perspective. From the prior high to low, we're right at the 618, 786 zone, this big red box. So are we going to do it? Well, we can start breaking above this, say, 6,100. That's the par swing point right there. We start breaking above 6,100 right there, then absolutely 75 plus percent, we're going to 62, 62.50, maybe get a little feisty towards 63. I still think we're going to end up going higher before we go lower, but is it possible we could see something like this and still get up there? Yeah. This is critical right now. I'm waiting to see if I see this start breaking that swing point, basically that 6,100, Mr. Tucson. I'm all about it, 100 points. I remember the days, futures traders looking at this, die and go to heaven on 1 point, 2 points. When we start closing above 61, you got a 100 point, 75% chance it's going to grind up there. Doesn't mean it's going to happen in one day. Maybe we kind of just bog down in this area, waiting to see what the Fed's going to do. Do they cut rates? Do they raise rates? Do they leave them alone? Or this could drift up towards there and start breaking out. We shall see. But I do the technical picture, the high to the low. We got to clear this hurdle, that support zone. And well, it's resistance at the moment. But if we start breaking above 6,100, I see no reason not to believe we're not going to 62, 62.50. So that's a good 100 plus point on ES. Should we close above 6,100? Be careful. Yes, I like the fact that we broke this downtrending lower highs, right? Lower highs, lower highs, lower highs, lower highs, and we broke it and retested it. That does look bullish. So if you're on this bounce, I would not guarantee it's going up here yet until we take out that all-important swing point and this battle zone. Former resistance, still resistance. So could we came close to that level and then kind of rejected off of it so far. Let's see where we close. But if we do start breaking above 6,100, game on. What if we falter? Well, a bad sign would be that this high low, we get rejected from this box. We start breaking back below this, say, 5,800. Then we have a 75% chance we're coming down to the magic Fibbo line. Any questions? I kind of warned us about this, saying that, I still feel we need to come visit this thing. Need to come visit it. Well, we did get close, right? Not too shabby, and we're bouncing. Is this the one we keep going? Maybe. Maybe. But I want a force price to prove itself. And so, Gary, that's, 40 points to go. Doesn't matter. I can forego a 40-point move when it's uncertain where it's going to go. To we start closing above 61 and give me 100 plus points, 150 points, maybe 200 plus point move. Yeah, I like it. So Ian, James, Mr. Tucson, Harold, be careful. On this bounce, I would definitely be in a position of authority if I'm still thinking, woo, we're going up here. Gary, you said we're going up to somewhere between 62 and 6,600 before Elizabeth, I'm coming to join you, honey. The big one. Still think it. But it doesn't mean we can't come down here first and officially touch this area. We did get close. Sometimes we don't get it, but that's why I warned you. A lot of times you'll get not quite reach it, go up here, fail in this zone, and then come back and get it. So be careful. Be in a position of authority on this bounce. If we do break 6,100, I'm all for it. Highest percentages, 75 plus, 6,200, 70 plus, 6,250. What's it going to do? You should be in a position of authority. What about the NASDAQ? NASDAQ's trying to do the same, although it's touching the 618. The ES was a little bit more aggressive, pushing a little bit closer to 786. But what's going to happen? All right, look at the two. It's very close. We're into the 618 area. We're rejecting off the 786, but we're in the zone, but still in the resistance zone. And NASDAQ just touched at 618. Emil? Uh-oh. Houston, I like the fact that we broke the trend line. What did I say? If we broke it, we're going to go test that 618. We did it. Be in a position of authority. Well, what if we start closing above, say, 2,200? Then it's game on for 22,670, 22,008, area and likely probably going toward 23. This is kind of what I'm thinking. This also fits in from the prior bigger move high to low. It's my 1618 up here, right around that 23.5. So I do think before we're done, we're going to go higher. The only question is, are we going to break it now? Or are we going to fizzle high to low, reject the 618, and come down toward these extensions, aka my magic Fibbo line? Magic Fibbo line. It magic Fibbo line. Right there. So be careful. If this does go up and close above this 21.7-ish, so I'm kind of rounding off around 2200. Why 2200? That's this swing point right in here. So right around that swing point, we get in that 22 area, then game on to go to 22.6. Highest probability. Right? Say it. 22.6, 22.8. So is this the breakout, or are we going to get another push before we get up there? I don't think this is all-time high where we stop and we crash from here. No, I do think we got more upside to come. Any questions on that? Force price to prove it. So the fact that we hit this and we kind of pausing doesn't mean we're still not going to go up here. I personally think even if we get rejected, we come down here and bounce off of there, we're still going to get up here. If this doesn't, and we keep going and we close above that 2200, which is that swing point area, former resistance over here, then temporary support, back to resistance, resistance. So if we break that, then it's game on, not only go to 22.4 prior all-time high, but to make new highs. And I definitely think we're going to make all-time new highs again. Rinse and repeat. Do we get this first, or do we break it to go now? That's my line in the sand. Start closing above 22,000. Game on to go to 22, that's 670 points, 800, basically 900 points, 600 points, 900 points. Could turn into another 1,500 points by the time we grind up there. Big move still out there. I would personally prefer this retracement get rejected, come down here. Then I'd really like to take advantage of that dip, because we're still going to go up to these extensions. Amen? So force price to prove itself. Well, when do I get more bearish? Well, you know the rule. You go from the prior high, a low in this case, to the new swing point high, from this low to that high, and we start closing below this 21,100 area, then the door's ajar to come down here toward our 20,005, 20,004, basically right where my magic Fibbo line is sitting, right around that 20,350 area. Amen? So if this gets rejected, we don't hold this 21,120 area. That's my 618 from the low to the high. We don't hold that. We have a 75% chance we go into 20,500, 20,400. More likely going to come down toward this 20,000-ish area, which is, say, 20,003, where my magic Fibbo line is. Any questions on that? So right now we're stuck between a Fibbo rejection to the upside and a Fibbo support to the downside. Force price to prove it. Breaks below this. And I know you think, well, Gary, man, that's a lot of points. It is, but it's still the technical picture. So if we drift lower and we don't hold and can't break out, we start drifting below this 20,000, 200, 20,100 area, then game on to go lower. And I salivate to buy the dip down here. If not, and we can start breaking above that prior swing point right around 22,000, then you know the plan. 670 points, 800 plus points. All right. What about the Russell? Look at the Russell. Even the mighty Russell broke above, retested, is looking a little bullish. A little bullish. Well, all it's doing is marching right toward its big resistance level. And we got to move and compress this a good bit. But we're moving right toward the prior high to low. Let me actually move this over. I'll go to IWM. I think I already have it on this chart. But yeah, we start breaking above this 618, which is a little bit further up the food chain. There's my rejection level right in the zone. But we start breaking that, then the doors ajar to go to 246 area, 244, 246. We start breaking all-time highs here. Then we set the tone to 257, 268 on the bigger scale. Smaller scale is 244, 246, 250, then 257, 263, 268. Influence of events at 268. But I'm not convinced based on the latest move. Now let's zoom in. Based on the latest move, from that high to this low, let me fix that one. Get some of these off of here so we can focus on what we're looking at. Let me take these off, clean this chart up a good bit, and we'll do it from the prior high to low, and we'll get some new levels in here. Stretch that out, zoom this up. So when do we get bullish? We got to take out that 618, which, yeah, this is looking good so far. We're breaking above this former battle zone. We kind of went down to our magic Fibbo line. Now we're bouncing. What's critical, we take out this 233 area. We close above that. And I don't mean a wick. I need the candle body above 233. Then the tone is set for us to go to 249, 253. See it? Mr. Tucson, is this going to be the bounce off of that magic Fibbo line? We start closing above that 233 and change with the candle body. Then we have a 75% chance we go into 249, 70 plus plus, we go into 253. How about that? What a thing of beauty. But we could easily get rejected because look at the way this thing fell down. It looks like we would need a new lower low before we can really set the tone to start breaking out. But force price to prove itself. If you bought this bounce, I'd be in a position of authority. This thing could fizzle manizzle and end up tanking much lower. We talked about this target zone from the prior low to high. We broke 618 just in reverse. So from, I guess we can use this one here, from that low to that high, we're right at the 618, Mr. Tucson. That's where we bounced off of. Why do we use these Fibbo levels? Because it's like magic. A magic Fibbo and the extensions. So this was no surprise from that prior low to the current high. This would be an area we tested. This does look bullish, right? We tested the 618 and we're bouncing off it. We're back above the magic Fibbo line. That's bullish. When do I get real bullish? We take out that 233 area. Close above that. Then we have a 16-point move. That's pretty good. Up to 253. Maybe we extend it out to 260. Amen. Be careful. because this certainly could reach up here and then get rejected. What if we see that? I get very bullish because I still think we're going up here. But the question is kind of like the ES, do we get rejected, go down to the magic Fibonacci line? Does the NASDAQ get rejected, go back to magic Fibonacci line? Like I said, the last several weeks, if those go to the magic Fibonacci line, which the IWM Russell already reached it, then the Russell's going to come down here to then bounce when they bounce. Any questions on that? What else do we like to do with this? If we can get our tools, and we like these tools on bar chart, and we call this the heat map, but we have these little tools. You can't trade them, but this is the S&P 500. How many companies are above their 50-day moving average? I guess I got to refresh my page. But how many companies are above the 50-day moving average? I use this as a barometer of what's to come. And we are getting a beautiful bounce, but are we going to get a lower high and a lower low? So what I was saying the last week or so is if we do get the S&P 500, NASDAQ, et cetera, to run and drop down toward their magic Fibonacci line, then we'd likely see this at minus 10 or this 10 level or lower. So Emil, I'm still holding out. Are we going to get this bounce to fizzle and that 618, 786 there and gets rejected? And we do get a flush down to the magic Fibonacci line. If that happens, and I see on this barometer scale, we're at 10 or lower. Every time we get to 10 or lower, we get a reversal. We get a reversal. We get a reversal. We've been talking about that every time. So if I can get the markets to sell off, go down to that magic Fibonacci level, and we see this at 10 or lower, that's salivate country. Because I still think we're going to go back up here and break 90, or at least make a run towards 90, if not higher. When that happens, then we get the ES up around 63, 64, 65. I think it's going to reverse between 62 and 66 when it's done. And that would put us up here at 90 and above, and we're pushing 63, 64, whatever, and we're way up here. Then it's a reversal to the downside, reversal to the downside, reversal to the downside, reversal to the downside, reversal to the downside. You can see it over and over. Every time it gets to the extremes, it reverses. It reverses. I mean, it's like clockwork. So I use this as combination tool. What's the most important thing I use? The software, of course. Always and forever. So why are we bouncing? The software told us it was time for a bounce. My daily got oversold. We reached this area and we started bouncing. So this is why we keep an eye on this. Is my daily going to finish that up cycle? You tell me. Weekly's engaging up. We've been seeing this for a long time. Higher highs, higher highs, higher highs, higher highs. We hadn't officially hooked and crossed back up, but it's looking good. We're making a run, and we got a little bit more to go. Trend momentum's in overbought, red and blue, but money flow is not quite finished. So if we can close above that 618, 786 level we just discussed, that would mean this is going to end up cycling, and we're going to go breaking all-time new highs. Where's that on this chart? That's the ES. We can use that. So we're testing it right now, my friends. Do we break that 6,100? We break it, we know what to do. And what's the software going to do? That happens. This baby is going to continue to cycle. This one right here, we call trend momentum 2. It's going to cycle up. Money flow is going to continue. And we're probably not only going to continue, but we're likely even going to get the data to slingshot a little higher while the weekly pushes. That's how we get to all-time highs and above. Pretty simple. What if we get rejected? Right? We come back over here, we get rejected, we start breaking back down. Well, again, from the low to the high sets the tone. We start breaking back below 5,900 area. Then it's game on to go to 57, 57.50, maybe 56 area. Basically the what? Magic Fibbo level. So what would be an ideal picture? We get this continuation, we fail, we get one more flush, and we see the ES sitting somewhere around 5,700, maybe a little bit lower, right? We see that. And then we come over here to our Fibbo, this S5FI, how many companies above the 50-day? And that gets flushed down here to 10 or lower. Man, that's a beautiful setup to buy the dip. Now, what if this is the end when you get to anytime you're below 20, that means we're oversold. Anytime you're above 80, you're overbought. But when you really flush to 10 or lower, that really sets the tone for a big reversal. And when you're above 90 or more, it really sets the tone for a big reversal. So that's why I have these levels on here. And I like these extremes. So this would just be a perfect setup, in my humble opinion, James. We get rejected down here, we go dipping, and we come back down to the magic Fibbo line, so anywhere around that 5,700 or lower, and we come over here to this little chart, and we see this baby down at 20 and lower, especially 10 and lower. Bingo. Buy the dip. All right. What if that's not the case and it's over and we're going continue higher? Then we got the technical picture. We need to close above 6,100. We do it, then we know what the targets are: 62, 62.50, 63.60. Amen. All right. So if I can get so lucky as this gets rejected and comes down to 5,700 or lower, game on, my friends. Still going to go. Now, remember, I don't predict. The prophets predict, that's their job. Weather people, all other traders, everybody else, my prediction. Come join me for my prediction, my prediction, my prediction. Why anticipate with the best of them? I leave predictions to the prophets because I'm not a prophet. But I still put out on the line, I said that before we go breaking 7, we're going to break 4. Way down. So what is that referencing? Elizabeth, I'm coming to join you, honey. That's my Fred G. Sanford. Put your hand on the chest, Fred G. Red Fox. Elizabeth, I'm coming to join you, honey. Here comes the big one. It is coming. Not an if, not a but, not a hope and a prayer. It is a done deal. Technically speaking, it is going to happen. Do we rally up higher before it does? Yes. Is this bounce that one, or we need one more pullback before we do it? That's why I still say before we break 7, we're going to break 4 to the downside. So that is a big correction coming. Is it going to be the Doge? I mean, they're already starting to cut some government waste. 2 trillion out of the markets. This market is addicted like crack addicts to money, cash flow. You throw a bunch of money in the markets and it just takes off. You take away a lot of money and it's going to go down. So could it be that we get this quick pop into next week and then depends on the Fed? Or do we get a little retracement? Maybe it's next week we get this retracement, what the Fed does or says or something like that. Then we get the next run. But the higher we get into the 62, 63, that's kind of the sweet spot zone. 63 area is the sweet spot area. That when I start getting there, you mean I'm looking for a long-term down move. And what do you mean long-term? Could be another year that we start making, no longer make all-time highs. And it could be multiple years before we ever see it on. And we start getting that big move down. Yeah, it's coming. technically speaking, it's a bubble pattern. Look at this thing. You just zoom outward and it looks like those life cycle of a psychology of markets. You really bring this in the last multiple years. We get these corrections, we rally, but I mean, if you go to a weekly, this thing looks like a vertical hyperbolic move up. We haven't had a major crash in quite some time. COVID was a nice little dip in that area, sure, but it wasn't the big crash we haven't had in a while. Look at the run, you get a correction, a run, a correction. This thing has been vertical for many years now, since the last true market crash over here, other than COVID lockdown. But hey, where can we go? This thing could easily come back to this little zone of about 1600, 1700. Huh? From 6,000 plus go all the way to 2,000 or 1,700. Yeah. At some point, we're going to get that big, huge one. But that's why I'm throwing it out there. Before we break 7, we're breaking 4. And we break 4, depending on where these levels come in, if it holds or not, we could easily end up back around 1,700, 1,500 zone. That's what that psychology of market cycle looks like. I call a bubble pattern. It's like it pops. That's the pop. So this balloon just keeps getting inflated till it pops, and then we usually come back down toward the base. We can see that in many different stocks. Happens all the time. All the time. So be careful. That, yes, I think we're going higher short term. Short term. Are we going breaking out now? Or is that going to take us a little bit longer to do? Zoom in. This is looking good so far, but it's being rejected so far in the magical zone, 618786. So unless we close above 6,100, then you know my target, 62, 6250, 6350. Kind of round it off, 6350. That's my sweet spot. So what happens when we start getting to this extension and we get 63 or go 64 and start pushing the upper end of my 66? Back the truck up and I'm going short long term. We're going to do some puts, leaps out, and look for this baby to go crumbling below 4,000. That's the plan. So maybe I buy some puts when we're at these exorbitantly high levels, when everybody thinks we're just going to the 7,000, we're going to 8,000, we're going to 9,000, we're going forever and ever and ever, amen. We're going to the moon, Alice. It's coming back. So I'm going to look to load the boat on some puts and push them out as far as I can go and start shooting for 4,000 and below. Wow. Well, before we get there, this is the rubber meets the road. Do we break above 6,100? We do, and we close above, we're going to 62, 6250. We break that, we're going to 6350. And I definitely think, even if we get rejected here, come back to the magic fibbo, we're still going up here. I said it a long time ago, I'm saying it again. We're going higher. But is this little bounce the one, or we get yet another lower high type of thing where it broke the trend line, but it's still lower highs, and we could get one more flush down here? If we get it, I love it. I love to see the flush down here to buy for that bigger move up. And we're giving you some parameters to look at. What would I like to see on the software side? My daily flush down, cycle down, cycle down. This weekly, we talk about slingshots, etc. You join our service, you'll get to learn what this means. But if we can see this phenomenon where we engage up, we disengage. That means we start to see on the software right there, this red line, blue line, and green line that are turned up. If they hook back down and this hooks down, and all of a sudden we call that a disengaging slingshot, then this high to low, when that happens, the highest probability is we're going to go back to the low and make a new low. Right? We engage, disengage, we'll make a new low. That's kind of what I'd love to see. And on this technical picture, I'd love to see this get rejected, pushed down here to the magic Fibonacci line, and we say in the next week or so, we see the S&P somewhere around 5,700 or lower. If I see that, and I come over here to my S5FI, what is that? How many companies above the 50-day moving average? I don't trade this chart. I use it as a barometer. But if we can see this basically flush down, lower high, lower low, and that baby pushes and S&P sitting at 5,700 or lower, and we see this at 10 or lower, that is, again, I call salivate country, in which, Alan, we can buy that and look for a massive move higher as we reverse from that 5,700-ish level and still go up to the 62, maybe 63-ish level. Big move, massive move. Now, if we don't get that, right, what if we don't get it? Well, we close above 6,100 on a daily, not a wick. And I don't want to see us wick up into there and then close back below. I want to see us close physically above 6,100 on a candle body. We do that, then it's game on. 75%, we're going to 6,204. 70 plus, we're going to 6,250 basically. And we take that zone out, boom. There's my 6360, 6350 sweet spot. Do we get this to rally the rest of this first quarter? We got earnings starting again, the earnings cycle. As soon as it ends, it starts back all over. Oh, is that what's going to push us up here before we get the Elizabeth, I'm coming to join you, honey? Is it another crisis like the real estate market? We got a ton of real estate out there that is people having trouble buying homes. A lot of houses out there. Airbnb and some of those companies that are buying houses left and right, they have tons of properties just sitting there. Inflation, a lot of the problems that why Trump got reelected, we know them, we heard them, we've seen them. So what's likely going to be the cause of the big one that's coming? Maybe it's Doge. I mean, when you take 2 trillion plus out of the market, that's a big hit and we have to get a correction. The technical picture, I don't care who's president, I don't care who's doing what. The technical picture says before we break 7, we're going to break 4. That's what the technical picture says. So keep an eye on this DGS2. If this baby runs rampant, then what does that mean? This blue line is the 2-year maturity rate. It starts running up. This red line is the Fed rates right now. If we start ripping higher like we did over here in 21, 22, what does the Fed start to do? Raise rates aggressively, the most aggressive clip they've ever done. Right there. I showed you this the other week. But when this blue line started to race off, the Fed from these virtually 0% interest, 0.20 area, basically non-existent. What did they do? Boom, this ran off. They chased it. So I don't think the Fed decides, oh, I'll lick my finger, stick it in the air. I think we're going to cut rates today. I think we're going to raise rates today. They follow this. So this is telling us we got a market crash coming. We're at the area. Do we go higher first? Or does it happen sooner? But yeah, we're going to get those rates cut eventually, but it's due to a market crash. And during this period when our Fed was aggressively raising rates, 0.75, 0.75, 0.75, they were going crazy. They were chasing this 2-year maturity rate. And during that period in which they were doing it, what happened? Our markets went down and had our over here in November, June, and we topped out around October, November. When they finally stopped raising rates, you can see the Fed rates kind of flattened out at that point. That's when our markets bottomed in 2022 and started another run toward all-time high. The market hates uncertainty. And right now, there is no certainty they're definitely cutting rates, and there's no certainty that they won't even raise rates right now. It's a coin flip. Well, if they do, even when they were raising rates, people think, ooh, that's a good thing. Well, it's a bad thing when they cut rates because usually it has to do with some sort of financial debacle. But during this period, when we were running from the October 21 and we started getting this money to run, and we got that big dip. Look at ES during that same time frame. We got this big correction back in 2022 into October 2022, right there. That big correction, we went from 48 down to 35. And I remember when we were back in these archives, I warned you we were going to get this big correction coming down. I warned you, I warned you, I warned you. Then when we bottomed, we started talking about, yeah, it's time for another push. But that's why we could see that, Elizabeth, I'm coming to join you, honey. And it might be because interest rates go rallying again, and the Fed has to keep raising rates if oil prices start spiking 90, $100 or more. Let's just jump to oil real quick. It's danger zone. We got a big run up here. We got rejected. This isn't looking the bullish of bull right now. We're back below the descending trend line of prior highs. We keep breaking down lower. Well, that's a good thing, right? Lower oil prices means prices are coming down. Drill, baby, drill. It's all about supply and demand. Or even if Trump's drill, baby, drill, etc., inflationary pressure could still come back as this could go rallying. The big level up here from the big move is this 104, basically 105. Man, we break 105, inflation's out of control, and we could see oil prices rip up to 140, 148. There's no way. That's what they said when they went to 130. That can't happen. It's the technical picture. That can't happen. So what if we start breaking back down? We need another flush down in the mid to low 60s, maybe the upper 50s. I've had this support zone on here quite some time. I thought we might get it sooner. This could have been a head fake. I warned everybody, right, Dan? Everybody, man, you need to be in position of authority because, yeah, if we start breaking that prior high, then we're going to 90. I think so. But we hit 80, boom, we got rejected. So be careful. I'm not saying we're definitely going down to the lower 60s and 50s right now, but we got to use what we know from the prior low to the current high, which is a little spike higher there. If we start closing a little bit lower than the 75, then 72 is in check. 73 right there. And that's from the prior low to bigger high. So we got a low to high here. There's my 618 right around 75. This low to that high. That's critical zone. We don't hold it, we're going to 73. That's the next one. Where's that one from? This swing point low to that same high. So we don't hold 75, we're going to 73. We break 73, and basically the magic Fibble line right there, that big orange line, that's sometimes thin, sometimes fat, but we break that, then we have a what? 75% chance we're going to 67, 66, likely coming down to mid 60s, likely going to make a new swing point low. So critical levels to watch: 75, which we're about to test. We're at 76. We're getting close anyway. 75 is the first one. We break that, then we're likely coming down to my 74, 73 area, which is my extensions here. I know there's a lot of lines overlapping. That's the swing point low here to the high. That's my 618 level. So if 74 doesn't hold, 75 doesn't hold, we're going to 73. That doesn't hold, then we're likely getting a flush down to the lower 60s. And in my humble opinion, that happens, we're making a new low below 65. And what are my targets below that? 63, 61, then 58. That box has been here quite some time. So, yep, we talked about a big bounce here. The software said it. That's why I said it's going to bounce, but let's see where it goes and how far it can get to. And that is black gold Texas tea. Why are we seeing a pullback? Look at this software. It's incredible. We're overbought. We got a hook and a cross down. Would I be taking profits on the downside if I sold that? Yes. Why? My 4 hours oversold. Huh. It's that simple. We get a daily to do what now? Hook, cross, slope, angle separation. That told us days ago we had this hook and a cross that we were due for a 4 hour cycle down. So if I'm a day trader, a scalper, I don't care what you are, I get a daily hook and a cross. This 4 hour takes about 2 to 5 days to cycle. As an options trader, that's good to know that we're likely going to get a down move for 2 to 5 days. I don't want to use a daily option if I know it's going to take 2 to 5 days, so then I use a weekly option. Give it a little extra something, go a couple of weeks out when I know I got a 4 hour cycle. Well, what about a daily cycle? It typically takes 2 to 5 weeks. So then I go out on a monthly options to when I know I get a daily cycle down. Is this a guarantee we're going to get the daily cycle down? Not yet. My weekly's still up. It hadn't hooked, it hadn't crossed, it's not sloping downward. So this is critical zone. What could this do? We could engage, disengage, and hold that 75 and go bouncing and break out and continue higher. But on that bounce, when we got that daily, we talked about buy the daily when it was oversold, get to your position of authority. If it continues to run, great. If it turns around and pips you out for more profit, that's good too. But that's the technical picture. I can assure you, if this baby goes breaking out above 85, then we're going to 90. We break 90, then we're going to 105. In my humble opinion, no ifs, no buts. We break 90 up here, this kind of 90, 91 zone, we're going to 105. Could that happen? You betcha it could happen. So what if we start correcting back lower? You have the downside. We break 75, we're going to 73. We break 73, not on a wick, but a candle body. We break back below this magic Fibbo line. And then we're likely going to what? There's 67, 66, there's some extensions, and you see 65, 64. I think we're going to break this low over here. And this would just be yet another sideways overlapping chopping correction for one more flush to set up a new bounce. Why am I bullish long-term black gold? Well, look at the software. Not only did the daily cycle and the weekly was oversold and it's moving, but look at the monthly. So I told you weeks back, even a few months back, as we drift lower, we're going to get a bounce on black gold. I got a monthly getting oversold, got a weekly getting oversold, got a daily oversold. You can buy the daily, but get to your position of authority. And sure enough, my monthly starting to hook. We hadn't crossed yet, but we're hooked. I'm keeping an eye on that. My weekly went on to hook and cross. So 100% when we get weeks back, way back here, when this weekly hooked and crossed, we got slope angle separation. What did that tell me? My daily was going to cycle. Hint, hint, hint. It was going to go from oversold all the way to overbought. Trend was going to go from oversold all the way to overbought. What did it do? Boom. Or I like to say, boom, shakalaka. It went up there. Well, look, it triggered lower. My daily's turning over. So that's another reason why you should have been taking profit. And I've said so. And if I'm just a scalper type and I use a daily hook and a cross, then when do I take profit? When my 4 hour, and that's way back over here, gets to overbought territory, start taking some profit. And sure enough, it continued. But that's why I take profits, get to position of authority. If it continues to grind, I'm still in it to win it. And if it reverses and goes down, then I can get pipped out for more profit or stopped out for more profit and rinse and repeat. Never go broke taking profits. So in closing on black gold Texas tea, 75 is critical. We break that, we go on to 73. Hint, hint. We break 73, we're going down to the 70, 60, upper 60s. That's the extensions right there. And if we do that, I think we're going to end up making a new swing point below 65. And those targets at that point become 63, 62, basically 61.90. And if those don't hold, then down to 58. But what would that look like on the software if we get this big flush down here? My monthly's still in oversold territory. My weekly would be turning back over, starting to push lower. And my daily certainly would be back, and we'd be right back where we were here with a monthly oversold, a weekly oversold, a daily oversold for that bounce. Rinse and repeat. So I can tell you right now, Emil, we get down to the mid to low 60s or upper 50s. What am I looking to do at old black gold? Buy it. Buy it. You heard what Trump said. He's going to refill and top off those strategic reserves. And all of that oil he pumps in, he's going to sell it globally. He's going to use tariffs, like with Europe, for example. They don't buy a lot of our products as much as we buy theirs. They need us more than we need them. But one thing they could do is buy our oil and gas. And I love climate enthusiasts. It's all about the climate change. It is. But why would you have anyone other than the United States produce oil and gas? We're the cleanest producers by far, not even close. And what do you think? I heard a little clip I saw, and he was saying, well, if we let Russia and Iran and Venezuela and all these different countries produce all the oil, they're dirty producers. China, dirty producers. And you think that cloud of all those contaminants just sit there over them? It goes into the atmosphere and then drifts over to the United States, and we're getting the dirt. So that whole idea that you need to be a climate enthusiast and stop all oil production, we're not ready for the green. We don't have the grid to support the green. We don't have any of that. It's not the answer. So if it is about clean energy, you need the United States to lead the charge. Cleanest producers by far. We have more oil and gas than any other country by far. So we should be energy independent. And that's where we're headed once again. So what does that do with prices? Doesn't mean that oil is going to go down to zero. Well, if there's so much oil, then it's going to go down. No, remember, oil producers. I don't know if anybody watched that Taylor Sheridan show, Landman, but it was about the oil fields in Midland, Texas, in this area where they just drill, baby, drill, and continue to let them run. Well, the sweet spot is somewhere, but it's got to be above 60 and below 90. The sweet spot's about 78, kind of like where we are now, in the 78th sweet spot. Sure, producers like it a little higher, they make a lot more money. But this $75 to $80 range is their sweet spot where they make enough money to continue to explore and drill. And yet we start to get above 90, then all the producers out there with products have to raise their prices and inflation gets out of control. So it doesn't mean that even because we're drilling a lot that there's no way oil prices can go to the moon. They can't. And if it does, then that DGS2 scenario is going to go to the moon. And the Fed's going to have to raise rates. We shall see. We're going to keep a keen eye on it. So in closing on oil, 75, 73 are critical. That's this big green box. We break those, we're going down. We hold those, and then we start breaking back above this 80 area. We're going to 84. We break 84, we're going to 90. We break 90, we're going to 105. And if that happens, our Fed will not be, they're going to do the Ralph Cramden on that one. Humming, not cut rates. Humming, have to raise rates. No doubt. So be careful. All right. What about gold? There's gold in them there hills. And we're right at it. I told you if we can close above 27.20 area, that prior swing point, we're there. Let's see where we close today. Alan, we close above today, this 24.25 27.25-ish level, which obviously we're at 27.43, we're above it, then game on. Black gold, yellow gold. In this case, yellow gold is going where? 2,800, 2860, 2950. And I always said, and I'll continue to say, we're going to 3,000, and that might even be the tip of the iceberg. We're going to 3,000. And we're going to get rejected here and pull back, then go up, or we're going to break out. Right now, it looks bullish. From the prior high to low, that's that 618, 786 zone. And I wanted to see a break above that prior swing point. We're there. Do we hold it? Critical. We hold it, we're going higher. 2830, 2860. And what's the, if we close above here, what's the percent? 75+%. We're going to 2830. Almost $100. Beautiful. It is $100 when you throw in a 70 plus, we're going to 2863. Rinse and repeat. We break that, we're going to 2950 en route to 3,000. Silver. Silver's not participating. Gold's breaking and trying to make all-time highs again. Silver is just not participating. Do we need silver to fail and give us one more plunge? Man, if silver comes down in the mid-20s or even, 25, 20-something area down in here, back the truck up. If this baby starts closing and breaking that trend line, this thing's setting up for a big move higher. What I like about silver, it's way undervalued. It is the Ethereum to Bitcoin. Silver's not participating. Bitcoin's making all-time new highs. Ethereum's not. What's that got to do with gold and silver? Kind of my relationship analogy. If silver can start breaking out, it's got massive upside. Look at this big picture. And this is where I think silver is definitely headed. I got to go to a weekly because you got to bring in a lot of price action. But right here, ladies and gentlemen, we get silver to close above 35-ish. That's the 618 from what? The prior high to the low. We get silver start closing in that 35 plus range. I'd like to see this swing point about 37. I'd feel real good about that, but I'll go with the rule. We close above on a candle body, not a wick, but the body. Notice that's a wick and the body closed back down. So right at that level, that 35 and change, we get a weekly candle body closing above that. Then we have a 75% chance we got a $20 run coming. 55, 70 plus, $60. We can get a double. Everybody likes in and out, double. We can get a double. All we got to do is get silver to close above 35 and change. We're a 75% chance we're going to 55, 70 plus, we're going to 60. Might go crazy and push towards 70. So I have no problems. Again, I'm not a certified financial planner, so I can't tell you what to do, but there's no reason you can't be buying silver and holding it. If you're worried about expiration and, you can go out to 2027 on call options, leaps. But if you're worried about timing and time decay, just buy silver outright. Boom. Stick it in your safe, lock deposit, wherever you keep it, but hold it because this is a double coming. Spend 10,000, you make 10. Spend 20, you make 20. Spend 100, you make 100. Whatever. Buy and hold. It's going. This isn't, will it ever get there? It's going to get there. It's just a matter of when. Today, tomorrow, next week, next month, next year, 26, 27. When is it? That's the hard part, not the technical picture. So we start closing above this 35 and change. We got a big move coming, Harold. Boom. All-time highs is in the cards. I've been saying it for some time. We got our big correction. We tested that 618. I told you last year when we bought that down here, and I said, we're going to go to 35 by year end. We got it. Got that pullback. We didn't break it to my disappointment, but we got to where we needed to be. And then boom. Well, we can break that 35. It's over. We're going to 55. And I don't mean, hey, We see it close above 35 and change by the next day, the next week, the next month, be sitting at 55. When silver takes off, it could get there quickly, a matter of a few weeks or a month or so, but it's not like it has to get up that fast. No, it could take months. It could take years to get up here in that $60, $70 range, but it's going there. The technical picture has been lit and it's ignited with a lot of gusto when we start to see silver close above 35 and change. Amen. I like to trade SLV. That's one of the ETFs I trade. And remember the big trade we put on a long time ago. I sold a credit spread to take in money to buy my 26 call options. At the time were way out of the money with leaps. And I said we were going to go what from 26 up to 35. And on SLV, there's a little bit difference between the number. There's roughly the $2 to $3 difference. Roughly, I kind of rounded up about $3. So when I said it was going to 35, I said we'd make a move toward 32. Boom, right at it. See it? Can't make this stuff up. So my 26 call options were a thing of beauty when I got out around 32 because I knew silver was likely going to 35. Now, what happens if this? Could we do the same type of thing? Well, this descending trend line, if we don't break it and we start getting rejected, then we could come back down to that magic Fibbo line. So if I see silver, SLV, trading anywhere in the lower 20s, mid to lower 20s, I'm backing the truck up. Whether I buy call options again, sell a credit spread, bring in the money to buy some out of the money call options, leaps down the road, giving it years to play out. You can buy leaps out to 2027 right now. Do I think we're going to be pushing 38, 40 and higher by 2027? You betcha. Could we possibly be up at our 55, 60-ish range up here by 2027? Maybe. Hey, all trading involves risk. So there you have it. This thing is a coil, a spring, just tightening and tightening, ready to go. And all we got to do is close above that 35. Then that sets the tone. That's on this one. 35, that sets the tone. And I keep changing it on this chart, which I don't like. But anyway, we close above that 35 over here. It's over. We're going to the moon, Alice. And that sets up my 55, my 60, and maybe even pushes toward an insane 70 bucks. Because silver is way out of whack. And at some point, return should come back towards getting closer to gold prices, percentage-wise. We're way out of kilter here. At some point, it will return, and we're going to go skyrocketing. 60, 70 is not out of the question. Any questions on that? All right. Last but not least, Bitcoin's at a critical juncture. Do we get rejected up here? Do we go breaking out? Here's a couple of things I want to share with everyone. I definitely think, without question, it's starting to look a little bullish. We're closing above. That means the door is ajar. We start closing above that 105, and I don't mean just wick up there and pull back. That's the weekly. Look at this daily. It went up to 107 and then quickly got rejected. The good news is it's holding the backside of that trend line. I like that. We start closing above this 107, 108. We're going where? 120, 125. Does that mean it has to go in one quick shot one day? No, it can grind up there. But I do think we're starting to push that 120, 130. Where's the end? My target has been for years now, ever since Bitcoin hit a bottom of 15,000 and change. I told you it was going to 150 to 175. Is it a given? In my humble opinion, there are no guarantees in life, but in my humble opinion, yes. Why is that? Every halving, Bitcoin has done a 10x, and I'm going to show you Fibbos, and I'm going to show you just 10x, etc. So from this 15 and change low down in here, 10x is 150. 20x is 300 and change. So that was the big box, somewhere between 300 and 150. Every halving, that's what Bitcoin has done. Minimum 10x to 20x, 10x to 20x. These blue lines are all the prior halvings in 2012, 16, 2020. The most recent in April of 2024. We're still in the crypto bull run, but we're much closer to the top than we are the bottom. That bottom was at 15. We're not at the top, but we're much closer to the top than the bottom, obviously. So this is typical. What has it done in the history? You use your Fibos again. Who could have guessed? Who could have thought we use Fibo extension retracements, etc.? From the prior crypto all-time high in 17, coming to the crypto winter low in 18 before the next halving in 20, where did we go? We went to the 1618. Ooh, like a heat-seeking missile. Thing of beauty. The prior one here, we not only went to the 1618, we ended up going a far stretch to the 272. But every halving, Bitcoin is at least going to the 1618. So what's more importantly than what happened in the history, but I'm going to show you why it's important, is that where is my 1618 on the current swing point high to low? Bring that in here. And I'll zoom this in a little bit so we can see more current price action. Stretch this out. Bring this, actually I got to bring it down, then stretch it out. All right. So guess where from the prior high to low is that 1618 is sit 175. From the prior crypto high to the prior crypto low, kind of in the way of my box here, but from that prior high to low last year, last halving that is, not last year, but every time Bitcoin has at least gone to a 1618 like last time. The time before that, it went to 272. This time, we should at least go to 1618. It's done it every time before, at least. Why wouldn't it do this one? So that's why I gave you this target, 150 to 175. If we break that, maybe 200. I really don't think we're going to go 3 and above. Anything's possible with crypto, but that's the sweet spot. So what does that tell me to do with all my crypto positions when we get to this 150 to 175? GTFO. Get the out. Use that in there. Shut the front door. Get out. How about that? Get out. And is that going to happen now? Could we go ripping up there? I mean, if this happens next week and we're up here in 150, 175, I'm getting out. Yeah, I could get more, but nothing. That's the target. That's what it historically does. So I'm willing to take the risk and I'm willing to take whatever I might lose and leave a little something on the table. That's fine. So I think we're probably going to grind more toward mid-year to maybe as late as fall. That's kind of the 12 to 18 months. So another thing we've learned with every halving, this is the fourth one, that crypto post-halving runs 12 to 18 months. Then it dies out, we get a big crypto winter. Notice as you zoom out and you bring this into perspective, when do we make a bottom? Basically in 22, we had a halving in 20. 2 years later, we tried to buy out before the next halving. When did we top out? Roughly 12 to 18 months. So we topped out the previous one in 17, 4 years later. That's pretty much the crypto cycle. You get a crypto winter, crypto bull, crypto winter, crypto bull, and that winter bull cycle is about every 4 years. So from the prior high in 17, when do we make the next high? In 21, 4 years later. When do we make it over here? Right? At the high, and about 4 years later, we made the high. So from highs to highs, 4 years, from Lows to lows, 4 years. So do the math. When are we making our high? Last high was in 21. We're going to make that crypto high in 2025. Everybody with me? And from the low, last low was in 22. When should we be making the crypto winter low this next time? Somewhere in 2026. So that's kind of the thing. We're going to run for 12 to 18 months. We're going to get another crypto winter, and then we should be bottoming, look somewhere late 2026, maybe early 27. So what do I do with crypto earning? I take them, I put them on the side, unless I want to play the downside. There's many ways to, do crypto, but I just like taking profits and then saving up to when we call another bottom. How many times this past year, when we were in this 15, 20 range in the past year, back in 22, 23, when this was bottoming, I kept saying, and you heard me say it, man, Bitcoin at 15,000 is a steal. You better load in. At 20,000 is such a, get on your knees and look to the heavens and go, thank you. If I can buy Bitcoin below 20,000, I even told you buying Bitcoin below 30,000 was a steal. Talk about a deal, that's a steal below 30,000. And even then, we kept telling you we're going to 150 minimum, probably push that, maybe go to 175. And look how it lines up 150, 175. And when are we going to top out? Sometime this year. That's according to 4 years later from the last one, puts us in 2025. And when should we expect a crypto winter low? Sometime in probably late 26, maybe early 27. So I look for every 4 years, we're at a crypto bottom. Every 4 years, we're at a crypto high, right? That's kind of the cycle. So the last high was in 17 or 21, excuse me. So the next high, this is over here. That was over here in 21. So this high is going to end up in 2025. Then we're going to get another crypto winter low sometime in late 26, maybe early 27 for the next halving in 2028. And no matter how high Bitcoin goes, historically, during the crypto high to low, it's retraced about 75%, between 70 and 80. I kind of sweet spot around 75. So that tells me, what if we go up to 175? I think I showed you this the other day. It might still be on this chart. Let me see. But depending on how high we go, right? Still got some more upside to get toward that 175, 150, 175. But Alan, let's just say, and this is a little device here, let's just say we get up to that 175. Right around 175. I can get it close. 74.7. Can I get it a little closer? 176. Just say 176. Well, what is a 75% decline? Roughly about 40,000, 42, 44. So around, say around split the difference, about 41,000. We get to 175, then I'm going to expect Bitcoin to bottom somewhere around that 40,000. What do I do with all my 15,000 earnings up to 150, 175? Bank it, put it in reserves, and wait another year and a half or so for this baby to bottom sometime in late 26, maybe early 27. Then I'm going to look to buy somewhere around 40,000. Oh, what if we don't get that high? Then move this down. Let me see if I can move that. Say we get to 150, for example. 150, there we go. Then I move this a little bit further down, somewhere around that 36,000-ish. I made a statement a long time. We will never see Bitcoin below 25,000. Let's see if that holds. Let's see if that's the truth. But looking at this, not likely we're going to break 25,000. And who's to say that 150 is the end? Again, if it's not, we go up to 175, 180. What if we go crazy up to 250, 280, 300, whatever it is? Then we back this back up to about 75%, 77, 76, 75, somewhere in that zone. And that would put us more around that 76,000 range. That's only if we go way up here. But that's how you rinse and repeat in this market. And look at how we discussed this back here when it was at this low. I was like, man, this is a steal. You need to get in. And when it started to rally a little bit, we got a little bounce and started to see a little life. I was like, anything below 20,000 is a steal. Anything below 30,000 is an unbelievable deal. And I kept telling you it was going way up there. Technical picture, that's what it does. Rinse and repeat every crypto halving. And the next one is scheduled in 2028. Right? Out in 2028. So what is that going to do for it? If we top out, I didn't mean to do that, but if we end up topping out in 2025, where's the next all-time highs and next run going to be for Bitcoin? Somewhere in what? 25, 4 years later, 29. Having in 28, 12 to 18 months later, we should be topping out. Then in 29, when we're topping out, when should we bottom? Well, we should be bottoming somewhere in 26 to maybe 27. So we'd be bottoming somewhere in the year 2030, new decade. And we rinse and repeat for the next one. So hopefully you'll be with us for decades longer. God willing, I'm still continuing. As long as I'm physically, mentally, spiritually, and physically able, I'm going to continue for years to come. That's why our members have been with us for decades and counting. Let's keep going. But be careful that once we get to that target zone, don't get greedy. One thing I agree about Kramer, other than his inverse, he says buy, I sell. He says sell, I buy. But pigs get slaughtered. Yeah, you try to, bulls make money, bears make money, but pigs get slaughtered. Don't be a pig trying to think, well, it made my 150, 175. It's going to go to 3. It's going to go to 1,000,000. Yes, I think Bitcoin will reach 1,000,000. No way, shape, or form is that happening this cycle. Another reason that it's tough to swallow. Where's my, I think it's on this one. Market cap. Look where Bitcoin's sitting. In order for Bitcoin to go to 200,000, we have to put 2 trillion more dollars in this picture. What happens to the big companies? Apple, 3 trillion, almost 3.5. NVIDIA, 3.3. Microsoft. What's the likelihood Microsoft's going to double from 400 to 800? You need 3 trillion more dollars for that to double. You need 3+ trillion for this one to double. You need 3+ trillion for that one to double. Gold, yeah, it's at 18 trillion, but it's been around forever. Hundreds of years, it feels like, right? Ever since those days they would trade gold. So it took them many, many years. Bitcoin's only been around 16 years. And it's already in that 2 trillion range. So keep your things in perspective. Where's the 2 trillion going to come? Well, they just suck it out of gold and put it over here. And this thing could go to $1 million this year. I think it's going. I'm one of those that definitely thinks Bitcoin will reach 1,000,000 someday. But is that during this bull cycle? No. 150 to 175. And if it goes any higher, then fine. But I'm getting out. And I'm going to take those profits, put them over to the side, wait for Bitcoin to bottom in 2026, maybe 2027. We'll look for the technical picture. But we kind of were talking about this bottom right in this zone when Bitcoin was around that 15. I kept saying, man, you need to get in. It's not going to go, if it does go a little bit lower, who cares? Just add more to your position. This is the perfect time to start to get in. Below 20, steal. Below 30, tremendous deal. Now look at it, above 100. So where are we going in closing? We're going to 150, 175. You look at the prior lows to highs, 10x to 20x every time. That 15 low, 10x is 150. Then you look at the prior high to low crypto, and where do we always go? The 1618 at least. 1618 at least. 1618 at least. Right? So that's the 175. Amen? So I'm still a big proponent of Solana. I don't know if many of you know much about Solana, but I like Solana. I own it in my iTrust Capital IRA account. And what am I going to do? I'm looking for this thing to go popping. I'm going to sell all of my Solana in my iTrust Capital, turn it into cash. Once Bitcoin gets up around its 150, 175, where's Solana going to be? 330, 400? We'll see. I don't really care where it is. I got in much lower, so I'm in huge profit, and I'm looking to take more profit once Bitcoin gets there. And then what I'm going to do, I'm going to get out, sell it, put it into cash, and wait for 2026 to come around. Maybe Solana, I don't think it's going to come down to $8 again, but we'll kind of do the same. As low as it starts bottoming and reversing, we'll look to get in at these steal of a deals. Now, look, you could have got in at single digits back here when Bitcoin and the rest of the markets were bottoming, and then you could have made massive gains from single digits or double digits all the way to triple digits up here. Not too shabby, but I think this is here to stay as well. And I'm looking for opportunities to sell and buy and sell and buy. Buy low, sell high. Everybody knows that. Well, now the technical picture kind of tells you when's a good time to buy and when's a good time to sell. Follow granddaddy of them all, Bitcoin. I already passed it. But how Bitcoin does, the market goes. Amen. So there are ways to play this. There is this, and I don't know much about it. I just called my attention recently. There's a way to play exposure to Solana. CYFRF. Solana strategies. It's something new. So we don't exactly know how it's done the previous, but you can kind of see a little bit of lines on here. I got to take some of that off, but it's, $3. It was down here in 2 cents, 3 cents, and boom, it's up to 391. Way to get some exposure to Solana. Look on a daily chart. We're above the EMA, which I call the magic Fibbo line, and we're pushing higher. Is that going to go higher? As Bitcoin goes higher, Solana goes higher? You betcha. How high is it going to go? I don't know, but we certainly can start to take things into consideration. We don't have a whole lot of history with this to go based on, not a whole lot, but this is part of it. There's ways to get exposure to such without buying crypto out straight out. I like iTrust Capital. I'm not pushing it. It's what I have, but it's a great opportunity to do it with an IRA or a Roth in this case, like I have. I converted one into a Roth. And I think it's great. That means the older I get and I get to my retirement age, all of those profits I make, I can get it tax free. I like it. So rinse and repeat. But there are ways to trade these type of crypto without getting in crypto. And I'm closing now, but there are many ways to pay Bitcoin. BITU is a little leverage product. I still think we're going much higher on this one. It's in the 60 range. I was hoping we get the flush down here to the 50s or lower. Boom. Then we can go much higher. But I still think looking at if Bitcoin goes to where we did this the other day, Bitcoin from where it was goes up to where we think it's going, would be about 100+% gain. Not so much now that it's 105, but it was a little bit lower. Then I would put this around a 200+ gain being leveraged. So that would put us somewhere in the $100 range. And right now we're sitting at what, 50, what is it, 60? Let me zoom in on that. Up here about $62. So look, we're right at the cusp of breaking out. Prior high to prior low. We're right at this zone. Alan, we started breaking above 63.80, $64. Where are we going? 72, 75. Break that, 83. Break that, 98, 100+. So this is where I think this BitU is ultimately going to go when Bitcoin gets up to 150. But I don't care whether you just buy shares or you had an opportunity to buy way down here in much lower levels. We talked about this early on when iBit and all the ETFs came out, that this was some ways to play it. Well, when do you GTFO? When Bitcoin hits 150, 175, whether that's up in the 90s, it's up in the 80s, I don't care where it is. When Bitcoin hits there, get out. Wait for this to come down into 2026 over here, somewhere maybe mid to late 26. We bottom wherever that is. If it's 20 bucks, we shall see. If it gets to 100, maybe it's 30 bucks. I don't know. But as it starts to bottom, then I can look to buy that in late 26 and shoot for 28, next crypto high, and see how this works. There are a risk of being in these type of products. They are new. Maybe they default and go out of business. I don't know. But I'm willing to take a little bit of risk. All trading involves risk. And last but not least, this guy is not participating, been testing these lower highs. I think it's a coiled spring. There is some talk about some management turnover with the Ethereum group. We don't know what that's going to do, but it is what it is. It starts breaking that prior swing point up here, breaks the trend line, breaks the swing point. Then I think we're going higher. I still think there's a chance we're going up in this zone. We shall see. When do I bail on my ETHU? We got in at $4. We're sitting at $7. When am I going to bail on that? When Bitcoin hits its 150 to 175. If this thing takes off like Ethereum was projected to do, go up around that all-time highs, we should be in the 20s, 30s at least. If Ethereum starts breaking that 7,000, starts moving toward 10,000, then we should be somewhere in the $80+ range. That's a big if. We got to break some trend lines first. And Ethereum has not done it. That's warning. We could get another flush down here. But once it starts to break out, then it's game on, which from the prior high to low, we still have that going for us. We've been in this zone, so likely we go to 53, 58, maybe up to 7,000 is kind of my zone for now. When it breaks, I break. If Bitcoin hits 150, 175, I'm getting out of ETHU, which is still up big. We got in at around 4 down here when we had those junk bids filled. Amen. Do we get up to 16, 30, 20? Do we get up there? We shall see. This will not get up there if Ethereum doesn't go breaking out. It will not happen. If it does, then it's definitely going to happen. That's simple. So when do I bail on all my crypto? When Bitcoin reaches its target. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor instructor. Join us again tomorrow. That's it, and that's all. We'll see you tomorrow.